thank you for everybody joining today. I appreciate we're taking your lunch, as somebody just commented there. We're taking your lunch hour. We wanted to put this session together mainly to, we recognise that the kids, thank the Lord, are back to school now. And actually, we're thinking there's going to be a new focus. You know, people will have the less distractions within the home. We know that that's now their place of work. So actually, people are now focusing, saying, okay, right, now September's here. It's almost like the 1st of January again. How do we get our head down, knuckle down, but actually, what are the things that we need to look out for? What are the current issues that's still happening within the industry, or within, you know, for small businesses and also for advisors and accountants? How can we help? How can we use the knowledge that we have, you know, the wealth of knowledge that we have on this panel, not myself included, and actually get some answers, or actually start creating some conversations that might help somebody to get those answers. Now, as I said earlier, we've collated the questions that came through, and we had over 50 questions that came through. So thank you very much for the people that put them through beforehand. What we've managed to do is we've actually, because there was some that were fairly similar, we've put them to some themes. We can run through the themes and we'll go through the questioning as we talk through it. But also, as I said, any questions you have, anything you want to put forward, please do ask. There is some questions that came through that are very, very specific to a business's needs. So what we're going to do is going to pick those up offline, and we'll designate who's the right person to pick that question up and obviously answer it for you. But what I want to do first of all is actually take you through, or actually get some introductions from the people on the panel, but actually not just who you are, what's your name and where do you come from, but actually a little bit about your business as well, because there'll be people on here that are going, I may have heard of Business Doctors, or I've heard of Debbie from NotJustNumbers, or Swoop, or Futrli. But just if you could give us a couple of minutes, just explaining a little bit about what you do. And Matt and Debbie did it so eloquently just before everybody joined. So if you could just repeat that, that'd be lovely. So I'll start at the top of my screen, and I've got Matt from Business Doctors.
Thanks, Sam. Yeah, Matt from Business Doctors. We're a national network of business people, really, that are passionate and interested and invested in helping small businesses, medium businesses. Particularly at the moment, we've been very focused around assisting businesses with resolving the challenge of COVID, putting in the cash flow forecasts required to deliver the funding that they require through, and a lot of the questions today around C-bills and bounce backs and things like that. We work very closely with Swoop and Futrli to make sure that we can give customers access to the right information at the right time. But ultimately, we're about planning businesses and helping them, that the owners and the businesses realize their personal aspirations and actually step back and have somebody from the outside in give them a different perspective on how to see how they can grow, even in challenging times. You know, COVID has been unprecedented. However, businesses have been dealing with unprecedented incidences, you know, for many years, and it's just a question of making sure that you can plan your way around it and to tackle the short-term problems, but get a strategy together to really see how you can grow your business. And, you know, we can be positive, I think. You know, yes, we've had a lot of challenges, and many businesses are still suffering immensely from this, but it's about how we can actually deal with the situation, think about things positively. So that's what we're here to do.
Fantastic. Thank you for that. Debbie.
Hi, I'm Debbie. I run a digital accountancy practice called NotJustNumbers. We are based up in Leeds. We're just a small team of 6 and an FD company. And we're really there just to support SMEs. And our whole purpose of being is exactly that. It's not just about the numbers; it's about total business support. So we're around education, around training and planning. We do everything from compliance upwards, but our main focus is on advisory and supporting clients on a monthly and quarterly basis. We've been working with Futrli since day dot. I think I threw my most complex forecast at Hannah many moons ago and said, "Can you replicate that? Because if you can, I'll be a partner." And she did, and it's been amazing ever since. And our clients love it. We've got probably 60% of our client base running through it in one form or another, loving all the new Futrli Flow and just the new tech that's coming through. Just get really, really excited about all of that stuff. So again, our main focus through COVID has just been how can we support clients? How can we take that pain away? Can stop them worrying? Just give them a plan and support where we can. You know, we've recently signed up with Swoop, and again, that's just been really super helpful, just in terms of helping attract some funding for clients. So it's just about support and relationships, and that's really what we're about.
Fantastic. And I think just one stat that you quoted there, that you deliver or offer advisory services to 60% of your customers, your clients. In the industry, that's typically 10%. So that really is a really, really huge achievement and high number that you don't see much in the accounting space. So hats off to you on that one.
Thank you.
Thank you. Andrea?
Hi, good afternoon. My name's Andrea Reynolds. I'm CEO and founder of SwoopFunding.com. Prior to launching Swoop, I was a chartered accountant and corporate finance advisor, and it was through that experience of raising finance for young, growing businesses that I realized how difficult it is for a business and their advisors to navigate the landscape. It's completely changing all the time, different lenders, different government schemes, and it's only exacerbated through COVID. So what we did was build a digital platform where you can integrate your accounting, your bank accounts, we pull the company's house data, etc. And we build your financial profile and match that to the eligibility criteria of not just lenders, but investors and grant agencies. The second part of the business is not just looking at raising funding for you, but how can we help you on your saving side? So improving your cash flow by cutting some costs around utilities, banking, FX, etc. Because it's a virtuous cycle. If you can improve the bottom line, you improve your affordability for a loan, etc. Our customer base is everything from startup, pre-revenue, right through to 20, 30 million pound businesses. We're absolutely love working with all of our partners on this webinar today. Hannah, I gave her a big task at the beginning of COVID when I explained to her what type of cash flow forecast the CBILS lenders were looking for, and literally within a week or two, Hannah had the entire thing built out. So we've been delighted to be able to integrate Futrli into our customer journey as well. So yeah, I'll stop there. I think there's probably lots of questions on the funding side, which we'll dig into shortly.
Thank you. And I must say that we have not asked for any plugs of Futrli from any of our panelists. This is all off their own back. Genuinely, there's no money being passed hands or anything. So thank you for all your kind words.
Very humbled here. Thank you. And I'm just going to say I'm Hannah from Futrli, because we've, the intro for what we do has been so brilliant. But my background is small business. I ran a pub when I was bought a pub when I was 23, and then nearly lost it because I didn't forecast VAT properly and got bailed out of that situation. So my drive has been to really help prevent the 50% of small businesses that are failing. And unfortunately, we know that figure is going to go up this year because of what's happened, and it doesn't have to necessarily with the way that I use forecasts, the way that I think Debbie does and Matt, if we use them like a sat nav, use them to guide every decision that we make, that's what we're trying to do in the business. So yeah, let's move on to the questions.
Yeah, fantastic. Well, thank you for the introductions, and I think it was worthwhile just going in a bit more detail. So thank you all. So again, we got quite a lot of themes that came through. Quite a lot of them, Andrea, will be pleased to hear, were from a lending perspective. But I think what we'll do is we'll open up those questions to just get a bit more out of an understanding of actually what it's like in real life, not just from like I say, from an application perspective. So the first question that we have here is, I took a bounce back loan and received it, but I'm now wondering if I could reapply for more money due to cover, or can I apply for a CBILS too?
So the answer is yes, you can apply for more funding. If you are looking to apply for CBILS, what you will be doing is refinancing your bounce back. So there are lenders, CBILS accredited lenders, who will look at, yes, you took a bounce back, but your business required further funding. And so they'll include that as part of the amount that they're giving you. Some of that will go towards paying the bounce back. In some other lenders' cases, they want you to ridiculously pay the bounce back first before they will give you the CBILS loan. But so just to say, yes, you can apply, but you will be refinancing. So there's slightly different rules for the for CBILS over bounce back. So the interest rate could be higher than 2.5%, for example. It's 80% guaranteed by the government, not 100%, etc. So as well as that, what you might decide to do, depending on the type of business it is keep your bounce back, but look at other products. So for example, if you're in something like where you've got credit card terminal sales, you might want to go for a facility like merchant cash advance, because that's purely based on your revenue. So you repay the loan out of your revenues. So what we're seeing across the platform right now is some are deciding to hold on to their bounce back and take a non-government backed product just to supplement, and then some obviously who need a much bigger term loan or refinancing to CBILS.
Okay, so yeah, that's interesting to hear that. Yeah, taking it from a different perspective rather than just saying it's one broad stroke of the brush that covers everything. Actually, look at different areas and
yeah, and that's a big point, because there are so many different niche lending products out there, and the trick in the game and all of this is to match the right funding product with your project need. So that's part of getting the blend of your capital right.
Fantastic. The other question that we had quite often come through as well was, I am a sole trader, can I apply for a bounce back loan?
Yes. As long as you were trading before March, you can, and as long as you continue to be a going concern right now. You may have had a dip because of coronavirus, so that's your COVID-19 impact. But the answer is yes, you're absolutely entitled to apply for a bounce back. And usually the question that comes alongside that, which I'll just add in, is can I get a bounce back if I don't have a business bank account and I run my sole trader out of a personal account? This week it's quite controversial, because the Competitions and Market Authority stopped Lloyds from forcing people to open full service business bank accounts before they will give them a bounce back. What most banks are doing and should be doing is that they say you can just have a service account. So they just set up a loan service account to put the loan into, and that's where you service it. So it's not a full-blown business bank account. And so the answer is no, you don't need a business bank account if you have a personal one with them at the moment.
Okay, and that was one of the questions that was coming up later, so thank you. We've managed to roll it into one. So
usually go alongside each other, yeah.
There is one in the Q&A though that just as an all-encompassing, is there funding away from CBILS? And of course there is. It's quite a broad brush. I'm sure you could talk the whole hour, Andrea, about that, but yes, there is.
Yeah, absolutely. And on that, and I'm sure Matt and Debbie are seeing this themselves with their own clients, and would love to hear some of their case studies. But in our case, absolutely. And it's just good to let everybody know other lenders are back in the market. So it's not just businesses that are back after the summer break. Other lenders who had retreated because the government kind of came in with bounce back and CBILS, the non-government lenders kind of took a step back, particularly in asset finance, and now those are all back in the market, getting active again, and we're seeing growth in those areas. So don't be worried if you've taken the government schemes, you're worried, is there anything else out there? The answer is yes, as long as we can work out, and this is where Matt, Debbie and Hannah come in, is as long as you can afford it, and that's where the planning bit comes into gear.
Yeah, and on that, I was just going to point to Matt and Debbie on this one as well, and say what's your experiences been from a funding perspective? Because obviously, Andrea's seeing it from the drawdown piece, but you guys are actually living it and helping them, I suppose, spend the funds, as it were, in the right areas.
Yeah, I think the main thing is that if you do need funding for your business, even if it's not badly affected by coronavirus, it makes a lot of sense to go for the CBIL loan because of the fact it's backed by the UK government. You don't have to sign a personal guarantee. The terms are fantastic. The interest rates are pretty competitive. You don't have to pay it back for 12 months. Well, they store up the installments for 12 months, then you have to pay a lump sum at 12 months. But it's like having free cash for 12 months. So always go for a CBIL loan. You may have to construct your positioning around that to make sure that the banks see it as something that meets the CBIL criteria. But for me, and the most important message for me for today really is that, look, you can't just take a CBIL loan to make sure you've got cash for the next 12 months, because you will get into a position where you aren't able to pay back the loan. You've got to invest that money in growth, and you've got to use it not just to survive, but actually to start thriving again. So you're actually building a stronger business, and that you're finding a way through this. There's a massive danger of just taking on money just to extend the curve in the wrong direction. You need to invest now in the next 12 months while you don't have to pay it back, in building a strategy and strengthening your balance sheet and coming out the other side.
What about you, Debbie?
Yeah, so we've seen a few CBILS loans, and we've had to do we've had to do a lot of work around forecasting that in and providing the right information for the banks, because it is a full credit application, isn't it? And again, I totally agree with Matt in terms of making sure it's affordable, making sure you're putting that money to good use. We've seen, obviously our clients are a lot smaller than some of Matt's, but so we've seen a lot of bounce back loans, and a lot of questions around the bounce back loans. But we've sort of taken the view that it's a really good product. It's easy to get hold of, sometimes a little bit too easy. And one of the things we've insisted on is making sure we've mapped that out certainly into the next 12 months, because that's when the problems are going to hit, I think, when people have got deferred VAT to repay, when they've got when the bounce back loans start to become due. So we're encouraging all our clients to make sure they know that they've got enough money to navigate that. But on the plus side, some clients have managed to pay off more expensive debt, which has enabled them to drive the businesses forward, and it's given them a 12-month breathing space, which has elevated them into a different space. And we've also had clients that have been trying to launch products or needed a bit of extra funding to get them to the next level, and they've used the bounce back to do that, and it's generated income now. And it, like just as Matt said, it's building. It's not just having money sat there in an account just in case. They're actually putting it to good use and driving the businesses forward, so that ultimately they're all in a much stronger position and will be able to afford to pay them back in 12 months. So there's some really good stuff going on as well.
There's a couple of questions about pre-revenue businesses though, and what funding is available for them.
Yeah, I'm happy to take that one. Pre-revenue businesses, the first and foremost thing that you should do is get a startup loan. That's how I started my business. And startup loan. Yeah. Okay. Startup loan is a great product. It's government backed, and it's for businesses that are pre-revenue. It could be an idea in your head. It could be that you're leaving your job and you're thinking, how am I going to live for the next 6 months while I get my product up and running? So startup loan is where we match the pre-revenue businesses who fell between two stools, because yes, they were trading, but they don't have any revenues. So they were trading, investing in building out their prototype or whatever it is. So startup loan is up to 25,000 per promoter of the business. So if you're a director, manager, owner, so we did 75,000 when we started for the three of us. And then after that, you may say, well, I'm not sure, 25,000 might be a bit too risky. I'd like 10, but I might need 25. You can get your first 10 and then go for what's called the second loan. So you can top up again. For the first 6 months, you get capital repayment holidays. So you're just paying the interest. You can do it over 6 years. And what they're looking at is if all goes wrong, would you be able to get a job and then at some point be able to make repayments to this? So that's usually where we start for those young businesses. And then thereafter, if you're in an innovation type business, make sure you're building in your R&D tax credit category so that you're able to make that refund. And then other areas you can look at is your first credit facility. There are specific lenders over and above your startup loan that will look to advance you funding when you're starting to get your revenues off the ground. So I suppose just also to mention, the typical interest rate is around the 6% for a startup loan, which when it's your first credit facility and you're less than 2 years old, that is a good rate. So that's usually the direction of travel for pre-revenue businesses.
Also on the R&D side of things, someone else has asked there, I know that if it is brand new research and development, if it's maintenance, it's not eligible. If it's brand new, absolutely apply. And apparently from what we're hearing in FD groups, etc., maybe you can confirm this, Matt and Debbie, that the R&D payments were last year. They were taking a really long time to come through. They've actually been coming through quite quickly, which is good to see. So for those people who are asking in the Q&A, yes, absolutely. And there are people who will help you. Your accountant can do it, but there are R&D specialists who will help you do it. And there are also people who will help advance it ahead of time. So, definitely look down that path if you're creating new wondrous products that you can prove that it's brand new R&D.
And on that, I believe it was Patrick that's just asked as well, Andrea, that is it personal guarantees on startup loans as well?
Yes, it is personal guarantee on startup loans, which unfortunately is where the bounce back is a much better product when you're starting out. And what they're looking at is they're not guaranteeing it against your home or anything like that. What they're doing is making an assessment of, you're starting your business, it fails, you go back to another job, would you be able to afford these repayments over a period of time? That's what they're making the decision on. Fantastic.
Sorry, Gordon, not Patrick. Apologies. We're actually I had a structure of what we were going to work through, but actually the amount of questions that are coming through, which is amazing. It's probably best that, because they're quite relevant to the conversation we're having right now, where we just pick some of them off now rather than coming back to them later. So we've got Andrea. This is from AD. Andrea, invoice financing discounting space. Has this A, got cheaper? B, what sort of deals now? Less due diligence and PG debenture constraints compared to the previous pre-CV COVID. Thank you. Work that one out. Yep. How does it affect CBILS financing?
Yes, you can get invoice financing facilities as your CBILS product. So it's not just term loans that you can get CBILS for. So yes, that's moving much faster now. So some of the key invoice finance providers were in the later group of being accredited by the government and are now available. So if that's something if that really suits your business at the moment, invoice financing has come on in leaps and bounds over the years. And there's different types of products. So you can get invoice finance on just one invoice. That would never have been heard of a few years ago. You might have just one debtor. And traditional high street banks would say, oh God, we can't go near that with just one debtor. We need a book of debtors, whereas now we have invoice finance providers who are totally comfortable with that. So in terms of, yes, the terms have absolutely improved if it's under CBILS, but the normal terms still apply if it's outside the government-backed schemes, and all of it's coming down to their assessment of your debtor. What I think it's important to say to everyone, I'm not sure if we have this as a question, but the deadline for CBILS is September 30th. So if you are considering it, don't be relying on the government possibly extending this. They have not moved on it yet. Bounce back, the deadline is the 4th of November. So if it's something that you're thinking about, I think, as Matt and Debbie were saying, look at the planning now on that. And you might have one invoice, but CBILS is the way to go on that as well.
Fantastic. I think I think there's a few questions here that are essentially asking when we picked up on the R&D for startups. There's quite a lot that here that actually once we've done the once the webinar's finished, I'll send a link out that gives you access to Swoop to register, because how do we access the R&D? Register for Swoop. R&D is part of it. There's also another question here as well around grants. I think it was Mohammed, never explored grants. How do I get started? I'll let Andrea cover that one as well.
Yeah, and hopefully Matt and Debbie have clients who've actually gotten some because it seems like the elusive tale of I've never heard of anyone get a grant. So there's during COVID, what are the typical grants that are available? If you've paid business rates, the first thing you're going to be looking at is, do you fall under the grant available for small business? If you're paying small business rates, so that's in the 15,000 to 51,000 bracket. If you're in hospitality, leisure, retail, you're automatically then looking at a grant of 25,000. If you're not in those sectors, 10,000. Now that comes from the local authority, and by now everyone who's entitled to that should have received it. So local authorities were supposed to be proactive in contacting you to do that. If yours wasn't, then you contact them. They'll have a form that you fill in and you register and let them know that you're entitled to that grant. That's the first thing. The second thing was then what they brought out was a discretionary grant. So let's just say you're in a building where you're paying upwards to another landlord. You sublet a particular space, or you're in a shared workspace. Those guys were getting left out even though they fell within a similar category. They started what's called a discretionary grant. Again, coming from your local authority. A lot of those discretionary grants in some authorities completely gone within like a couple of weeks, where then there's others and they're sitting there saying, oh, well, we have these left over. What should we do with them? Should we return it to government? And we're obviously lobbying to say it should go back into the places where the funds are already dried up. That's what's going on in COVID times. The other areas, Innovate UK, are running a lot more competitions than they used to, and they're much faster at turning around the decisions. It used to be like 6 months. Now it's a few weeks, and they're opening up more of those. So if you've got anything related to innovation at all, register on Innovate UK. We also notify if there's anything of interest. Outside of that, I know that there are others who are saying, well, I need to buy some equipment, etc. In the normal course of business, where would a business go to look for a grant? The main place to look is your local growth hub. So there's 38 of them around the country for each area, and they have what are known as capital grants and revenue grants. The capital grant would be, I need to purchase this equipment. It's going to cost me whatever X, you have to put 70% towards it, and then the grant will cover 30%. Now, those were the normal ways of how we would match businesses to a grant, just to get them, a new website or a piece of equipment. That's a changing landscape right now. Some still have funds available because they were European funds. Now that needs to be swapped out for UK funds coming in, and we were about to go through that transition when COVID hit. So we're still in that. When are we going to start replacing the European funding with the UK, what's called the Shared Prosperity Fund? We're still waiting on that. But what I would say to anyone is just check out your local growth hub, contact them and tell them you're interested in a grant and see what they have, if they've got pots of money left, and if not, tell them to let you know as soon as they do. Those are kind of the mainstay of grants available.
Fantastic. And I think there's one thing Martin Williamson has just shared, still around 1.5 billion of small business pounds worth of small business grants unclaimed. One, council's useless, or two, companies haven't claimed. Matt and Debbie, what's your experiences of grants?
Yeah, I mean, I think one of the things that you should always do is go out, speak, look, just like Andrea said, go and see your LEP, your growth hub, find out what, hold them to account. They're paid by taxpayers' money to support businesses. So find out what they do have available. Now, there was a £20 million grant that came in from Boris that was filtered out through the LEPs to provide business support. So this is to get advice from people like us, from other professionals, that can help you with your business. There was a question there just a minute ago about somebody looking to take their offline business, a nutrition shop, into an online format. That's exactly what this money's for. It's to help get the expertise into your business, to give you the strategy, to give you the direction of travel to do that. So those are sometimes they're 100% funded. And then the Innovate stuff, we've worked with a lot of our clients have pivoted during COVID. We had a lighting company, fantastic business, mainly reliant on a supply chain from Eastern Europe. That dried up with COVID. They were looking at manufacturing their own stuff anyway. This accelerated that plan. And Innovate UK have really been helpful in actually funding some of that innovation within that business to help them create their own manufacturing capacity. So again, what they need is a strategy. They need to see what you're going to use the money for. They need to see how you're going to really make it a revenue generative investment. And they will support your businesses. So we can help guide all of our customers and anybody else around that.
Fantastic.
On the grant side of things as well, it depends, the location that you're in.
Yeah, absolutely.
Will dictate, how many are going to be available. But just be prepared for a lot of paperwork and reporting back. And, it's free money for a reason. You have a responsibility to look after it and do what you said you were going to do with it. So they are absolutely, have a look. There's like Grants UK, there's loads of information. You have them as well, I think, on SwoopFunding, don't you, Andrea? But they, having gone through the process a few times,
I can say it's painful. Yeah, I helped on some of it, not to the extent that Hannah has. But what about yourself, Debbie? Are you experiencing?
Yeah, we've similarly we've had a lot of local grant funding. There was a digital growth fund, and that was just oversubscribed, and it said first come first served basis. So you've got to be really quick off the mark to get in and get some of that money. And then what we found was that they were so overwhelmed with applications that it was taking a long time to get pushed through and get a response. And we had one client where they said, "We'll just spend the money and we'll come back to you when we get time." And but then we've had another client who's a digital marketing company and in high growth mode. They've actually been recruiting people from agencies that have recently had to go into liquidation or unfortunately had to close. And so they're in a massive high growth and they're doing really, really well. But they've applied on the digital grants. But the paper, like Hannah said, the paperwork's quite onerous, so be prepared for it. And you've got to have your numbers in order.
Well, we all have something that can help with that. So one of the questions that came through earlier, which probably moves on to another subject which we didn't put on there, but someone was asking if they can have assistance in funding their business and support. But I guess that brings down to the equity side. Are we seeing much activity from an equity perspective? Obviously this is open up to everyone. I guess Andrea is the first one, as you offer equity through Swoop, but are we seeing much of that now, or is it disappearing? People have got war chests they want to spend, or?
I think what we had was, again, similar to the lenders I was mentioning, there was a massive retreat. And so investment in young businesses, particularly in the startup phase, literally plummeted. And what was happening was where investors would normally be active, particularly in March, April, because we're looking at tax relief based investments like enterprise investment schemes. So we saw a massive drop off, but similar to everything else, it's end of August. A lot of investors are back now. They're starting to get used to the new way, and there are still investors, especially angel investors, who do have a surplus tax bill that they could set off against an investment in seed enterprise investment scheme. So I would say if you are thinking about going for your first or second fundraise, make sure that you have your what's known as SEIS, EIS certification. Normally they're looking for you to name an investor when you apply now, because HMRC have cut that team severely. They've moved to the Brexit preparing team. So I'm sure Matt and Debbie have helped other businesses where in terms of getting your application into HMRC, you just have to give a brief business plan, a forecast on your numbers, what you're planning on doing, how you're expecting to grow. So that area is beginning to re-emerge. I would say what we're looking at are tougher valuations than what were in the market pre-COVID, and just more difficult. It's going to take you longer to do an investment fundraise now than it did prior to COVID. So make sure you plan that in to your forecast, that you're not expecting to do a drawdown in maybe what would have been 3 months. It's now going to be 6 to 9 months. So go earlier and be prepared to tough it out.
Fantastic. There's a question that come in here, actually, quite an interesting one and very topical. France and Germany have substantially extended their equivalents of the coronavirus job retention scheme and furlough to protect jobs. Do you think the UK government will extend furlough to protect jobs and remain competitive with European neighbours? Because without the furlough, we will see massive unemployment come November 2020 onwards, and businesses not going to take on additional borrowing. And that's a great point. And I think everyone's thinking we're kind of, I know we're potentially going into further lockdowns, but people are thinking, oh, yeah, everything's okay. But yeah, quite rightly, November is going to hit. The furlough scheme ends, and then suddenly we're going to hit huge unemployment. What's the thoughts? I'm going to open this. I don't want to put anyone forward because someone might not want to answer the question. But what are your thoughts?
Boris has said no, hasn't he already? He said it this morning.
Yeah.
Boris said so that's not.
Sorry, Matt. All I was going to say was I think that the small businesses have to realise that if you've got somebody on furlough and you need to make them redundant, you need to be consulting now, because they're still accruing holidays, they're still accruing everything that they're accruing on furlough. You're still going to have to, it's going to cost money to make redundancies. It's a horrible thing to have to go through, but you need to go into it eyes wide open and really consult an HR expert if you've got more than, how many, 20 in a 90-day period, I think, or is it 30 in a 90-day period? See, I need Hannah, who's my chief of people, to tell me this. But there's I think that it's going to be a really cold winter. And actually it's the head, pulling heads out of the sand. And I'm, going back to the forecasting thing, but understanding, what's the difference if you do and what's the difference if you don't? Are there opportunities for you to diversify? Are there other ways that you can generate cash? That's what you need to be looking at if this is a position that you find yourself in. Yeah,
absolutely. I mean, we were looking and sort of praying from a personal perspective that it does come to an end, because it's been such hard work to calculate it. It's not been a simple process, but if they do end it, they may have to look at some other forms of support maybe. But you're absolutely right. What we would say is, if you do need to start thinking about redundancies now, and you absolutely do if it's coming to an end, is consult with HR people. Payroll, a lot of payroll bureaus and especially, the guys that we employ, they're brilliant at payroll, but we're not HR experts, and people get the two crossed over, they get the two muddled up. And there are some grey areas, and we do know some stuff about that, and they know some stuff about payroll. But ultimately, when it comes to a redundancy process, please have a HR person on board and do it properly. We've got some people already looking at it, because it's already dropping to 70 and then 60. So already people are looking and saying, we can't afford to pay the extra bits, so we're going to have to make a decision. So
if you go to futrli.com and go to our webinars page, we have one from about a month and a half ago that was with Hannah, our chief of people, and HR specialist that went through all of this. So it's only an hour long. Again, if you're facing it, just before you contact a professional, at least it'll give you a grounding and some understanding.
I think one of the other important things here is if this is inevitable for your business, you need to make sure that if you're putting a plan together for exactly as you were saying, Hannah, you need to look at opportunities to pivot your business and innovate and try and find ways of retaining your people. But you may have to change the type of people you need. It might not just be about redundancy. It might actually you need different skills in your business. And it's important if you share the strategy with your team and you get them involved in, look, how can we plan the future for this business? How can we sustain and be successful? when it comes to those difficult decisions, at least they've been part of the journey. They've understood why the redundancies are necessary, and it's given them the heads up so they can actually see so they can see the writing on the wall, and they can start planning their own futures outside of your business, because we don't want that shock effect to come in just pre-Christmas. They won't pick up another role for 3 or 4 months. Give them the heads up so they can start looking for something else.
I think that's a great point, Matt. And I think what I have seen as well with smaller businesses, that I know I'm supposed to be asking the questions, but I thought I'd share. People are treating the business as it's ours, not, I'm not just the owner, it's ours. And how do we, as a collective, get through this? And I think that's absolutely right. And I think you're seeing that people are looking in different areas and going, actually, is this something I can get involved with? Again, I know we predominantly work in the accounting space. We're seeing a lot of that with the accounting space as well. Somebody who is, keying in data on a daily basis, is there something else that they can do that is more value? Yes, there is. And is it going to be more enjoyable for them to do? Yeah, absolutely. We've got fires that need putting out with our clients. Can we get them speaking to them? Can we get in front of them?
I would also say there was a question earlier about diversification and to moving online. So many businesses have moved into it and given themselves an online presence. And with the tools that are available today, if you're using online cloud technology for your accounting package, like Xero, for instance, which will then plug into your Shopify with your Squarespace website, the whole thing can just work together seamlessly. And you don't need a degree in IT to get it set up. It's set up for, small businesses to be able to activate on their own. So, something like iZettle, really simple, it'll link to your phone. You can then start taking, digital payments if you've never done that before. So just be brave, and get on the internet and go and have a look and just figure out which software, go and have a look at e-commerce platforms and work out which ones feels the easiest to use for you, but make sure that they've got those connections to the other pieces of software, just to make sure that everybody's life's easier, so people like Debbie and Matt aren't plucking through your books at the end of the month.
Yeah, I think on that as well, does anybody have any recommendations of where to go to help, I guess, drown out some of the noise when you are looking at that? I know we referred to some of the LEPs and so on, but is there anyone, I guess, is open to anyone this question that they would really recommend to have conversations with, or even plug yourselves by all means? if that's an area that you have expertise in, then absolutely, please share.
Well, we wrote a presentation for one of our clients who did a digital marketing week, and we wrote an app stack guide. So, happy to share that with people. But there's people like Apps Advisory, who can help, and they'll do some recommendations.
Also, the FSB, it's been around for a really long time, but it's moving in the right direction. Enterprise Nation, your growth hubs, Barclays have got Eagle Labs in lots of cities that you can, go in and make use of. They don't charge for it, to my knowledge. If our own peer community, get in Futrli's peer community and ask. The answers are pretty quick if you need recommendations on anything like that.
Yeah, and Jason's just added to that as well. Yeah, FSB and universities as well.
Yeah, and just on the HR front, even chambers of commerce, if you are a chamber member, their HR support aspect is actually really good. That is one of the things I would say. There's some of it I'd say, I'm not sure, but actually the HR side of it is really good, and you can phone someone up and say, this is what I'm going through, and you get all the advice that you need. So I would say some of them are good for certain things. They're good on the HR front for sure.
And ACAS, of course, it's not just employees that can phone ACAS, employers can phone ACAS as well.
I think the other point on digitisation and transformation is that the Knowledge Transfer Partnership, which is part of the Innovate UK, they work closely with the universities. They can help fund an expert to be put into your business as a project manager to actually take you on that digital transformation journey, because sometimes it's not just about getting the tech, because you've got to understand how you're going to get people into your online shop. You've got to understand how you're going to engage the market. You can't just put your stuff online and expect people to come in and buy it from you, because you're going into a hugely competitive space. So yeah, think about that as well. It's a really good opportunity working with
That's kind of a question. You know, during this period of time, do you stop marketing your services? No. You do not. You need to make yourself heard, and you need to, you know, you need to stand above the rest, because it's going to become really, you know, competitive. So that would certainly be my advice on that front.
Just on the last one on digital, just to say, if there are people who are trying to pivot to online, we're keeping an eye out. We're waiting for the announcement. There is an organization called Be the Business. It's a government-run organization that improves productivity for businesses, and we've been talking to them about what programs are coming out. And this is one of the areas they're going to focus on in terms of supports and providing something for businesses. That I think they're going to call it the virtual CTO, where anybody who is in that situation and they're thinking, how do I go from offline to online, or certainly increase it, that's what that support will be about. So as soon as that comes out, happy to share with the community as well.
That'd be fantastic, yeah. And we do some work with Be the Business as well. They are a really good sensitive resource. Rachel's just asked, I don't know whether that's in relation actually. We're wondering a bit more about the grant that is coming on Tuesday. I don't know, does anyone know about the grant that's coming on Tuesday?
Is that the 20 million of that Matt was talking about? I think we put it on our recent newsletter, but the 20 million that's available for strategic help, you know, and financial strategic support.
Okay.
Yeah, I'm pretty sure it's that one. I think some people, some LEPs have already publicised that fund and allow people to gain access to it. The challenge is that every LEP is different and has a different set of rules and has a different set of engagements, and some of the money is actually being funneled into innovation rather than just the broader aspect of business support. So you need to talk to your LEP as soon as possible and your business growth hub and find out what they've got to say.
Okay. There's one other question that I wanted to ask, which came through before, and it's quite broad, but actually I think it's worth pulling on here. Is I'm thinking of setting my own business. Is now a stupid time to do so?
No.
Best time.
Some of the best, yeah, exactly. Some of the best. I think statistically, there's always a huge growth of businesses during a recession, and they typically weather the storm because they've got grit and determination. So no, crikey, if you can access funding, you've got a great idea and a good business plan, and have got a forecast that you're gonna, you know, update and check, you know, and you're not kidding yourself on, go for it. But don't start without that. You need to, and also, I will attest to, as being an entrepreneur, I'm sure Andrea has in the past, and all of you have actually, because you all are, that you're over optimistic sometimes in what you think you're going to achieve. So ensure that when you are creating that first forecast, that you've got a worst case, and your worst case is really a worst case, and how much cash would you actually need, so that you're looking at the cash burn side of things, you know, for getting up and running, so that you give yourself the best chance for sure.
Fantastic.
Also, I would say just recessionary and times of crisis and change is when you get the most engagement from other, maybe it's your customers, where they would have just gone as business as usual. Now they're looking around for good deals. They're looking around for new ways. So people are more open-minded. Those difficult to reach customers are more open-minded. You should find that you're getting better deals on whether that's rent or space. You probably will have a rates holiday. There's all these positives about starting a business now, because also you're not having to cope with fixed overhead legacy issues that others unfortunately have right now. So you might be able to be a bit more nimble and grow faster and be able to say yes to things faster. And as I say, the market's always more engaged. Salesforce started during massive recession. Amazon started during massive recession. If you look at the key players, that's when it's actually a good time to start.
One of the other things I'd encourage people to look at, if you are coming out of a corporate role, and there's a lot of fantastic people being made redundant at the moment, unfortunately. And if you're not fully equipped to sort of start your own business, and you're a bit nervous about it, and you're not a natural entrepreneur, then there is that halfway house, which is looking at franchises. And obviously the franchises that have come through this are likely to be, you know, a longer term bet for you. And it's a business model that is still risk. There's still risk attached to it. You still have to work really hard. But it does give you that sort of comfort of not being on your own from day one. So that's just another bit of advice for people thinking of starting their own business.
Yeah. It's a great shout. And what's interesting from speaking to a lot of our accounting partners, and I will put the question out to everyone here, but I asked the question, you know, how have you seen obviously an impact for your small businesses? The answer is obviously yes, but actually, have you lost any small businesses? And the majority, if not all, have said no. And the ones that they have lost was a struggling business before COVID. I guess just putting it out to, you know, probably more Debbie to start with. Have you seen any of this? Have you seen any impacted any of your clients currently?
Not at all, and we've still been taking on new ones as well. Interestingly, right at the beginning of COVID, we probably had, I mean, we're a small practice, but we probably had 5 or 6 inquiries a week, which was massive for us. So we've continued to take on the right businesses. We do have a target market, but we haven't lost one, touch wood. But it comes back to what we said before in terms of next year. I think some of the problems might creep out into creep to the surface in terms of, and this is why you need a plan. This is why you need to be looking ahead all the time and forecasting, because once the bounce back loans kick in, once the CBILS repayments kick in, once the VAT deferment kicks in, self-assessment tax deferrals, all of that stuff, that's into next year. That's when some of the problems are going to arise. And I think currently some of the businesses have had a lot of financial help. They've had the grants, they've had the bounce backs, they've had the furlough pay, and they're managing to get through. And some have got more money than they had originally, so they're doing quite well. We haven't had a missed payment or a deferred payment. Everybody has paid on time and got through. But I do think if people don't start planning now, there is going to be a problem next year.
I agree, but equally they should be planning anyway.
They should be, but people don't always.
They don't, and it's this. You know, I think that this has to be a wake-up call to go right. You cannot navigate a business without a live, moving prediction that's guiding your way. And if there's a bump in the road, it'll tell you ahead of time. That's the whole point of it. You test your decisions before you make it. You understand every single decision you make and the impact that it would have if you do it. It shouldn't be forecast. It's great that we have so many people creating forecasts for the CBILS loans, for instance. But they should have had them already.
And it's keeping that going, isn't it?
Well, this is it, and so,
The challenge is, guys, is that a lot of business owners just haven't got, that's not what they do. Most business owners aren't accountants. They're not comfortable with the spreadsheets, the numbers. They're really good at making what they do. They're really good at helping their customers. And they just haven't, it's just totally outside of their comfort zone. So you've
segued me beautifully into our new Predict launch. I've been working on for 2.5 years, but yes, absolutely, couldn't agree more. Which is why there needs to be this kind of hybrid software that will look at short, medium, and long term cash flow, as well as all of their business performance and sales trends and profitability, and the entire picture, but live updating and moving based upon the decisions that they're making every day, so that it gives you guys as well, it looks after them in between your meetings. So for sure, with Advisor, we'd absolutely recommend continue using that for long-term and strategic planning and management reporting and all of those things. But Predict, for people, particularly if you're not as comfortable with your numbers as you might want to be, it's I'm shamelessly plugging now, but it's it's absolutely set up to be that business sat nav, so that you know where you're headed.
Yeah, you don't need a sat nav, you need a strat nav.
Yeah, strat nav, love it, exactly. But that's where you guys come in. You don't have a great advisor. That's your job, is the advice. It's not the data preparation.
We just give you an example. I had a meeting with a client yesterday, and interesting, even at our bookkeeping level, they'd said to our bookkeepers, things are really bad. Oh, not really. All this, and he does have a forecast in place. but he said, I'm not really looking at Futrli at the minute because my sales aren't where they should be. And even at my bookkeepers turned around and said, this is exactly the time you should be looking at Futrli. And actually, we revisited it yesterday, and I said, right, let's be really, and we started off and said, actually, when we last met a quarter ago, this is what you predicted, and we kept it really realistic and really low, and he smashed that out of the water. So we started on a high to start with, to say, actually, what we predicted last 3 months, you've more than smashed anyway. And we went and we fed through all, what we think is going to happen in the next 3 or 4 months up to his year end. And all of a sudden we moved a bit around, and we paid off some expensive stuff and shifted it all around, and said, if we do manage to hit these sales, which are massively reduced on what they normally are, you're still okay. And he was thinking, oh, I'm not going to make it, I can't do it. But actually just forecasting those 3 or 4 months in advance, he said, we're all right, aren't we? And I went,
well,
yes,
and
you are.
And I bet you're sleeping at night now.
Yeah, exactly. He
was
really,
if your accountant is not giving you advice like this and sitting with you, or advisor or FD is not sitting with you and having conversations like this, go and find a new one. Honestly, there are so many. Well, there are, but this is the point. And the industry is moving. The accounting industry is moving, and there will be practices that won't make it because they're not giving the type of advice like that to build confidence in their small business client base. And just because, traditionally it's been the bigger, the larger, the ones who've got the biggest cash flow, who they've given, offered advisory services to, it's not how it should be. Every single small business deserves advice and help. And that's all it should be, is help in interpreting the best route, and let the software do the hard work so that you guys can have the conversations, that will impact and make a difference, just like Debbie's illustrated there.
Yeah, so, it has to be. I mean, most entrepreneurs, it's not yes, we need to account for it, we need to predict it, we need to put the numbers into a really coherent format that we review all the time, which is where, Futrli and Predict and Flow is fantastic. What they actually need, I mean, we've done a lot of COVID cash flow planning using Futrli and using Swoop to access the funds. We've then, take a sigh of relief. We've managed to get the funding. Where are the sales going to come from over the next 12 months? We need to know what we're going to plug into this machine. So we need to have real support around helping businesses understand how they can start planning their sales, how they can start planning their new markets and their growth, and focusing on the profitable bits of their business. And it's a combination. We need to use both. We need the strategy and we need the number machine to give them that visibility every day. So I think between us, we've got it covered.
Yeah. Just reach out to everyone. I'm just conscious of time, and I apologize. There is one question that hasn't been answered, and Robin's just flagged it again. I will quickly ask you now. Selena Finance just raised 42 million in Series A. It looks like a compelling idea to allow corporate debt 25 to 1 million, thousand to 1 million to be raised against equity in owned property. Do you know the products? I have reasonable equity in my property. This looks less onerous than bank loan. What are your thoughts? Andrea, I think.
They're on Swoop.
Okay.
Yes, they're a product on Swoop, and it is that's what I mean. Selena, that there are all of these amazing niche products now, and Selena is one of them. And what's happened in the market is, the UK has the largest alternative finance market outside of the US. Selena, that is exactly one example. The other is, if you're an e-commerce site, now there are funds that you can get that are completely based on your Google Analytics results, and so these are funds. Every lender now has their own niche area. They've worked out their algorithm, their credit model based on their sector that they understand. Selena is that example in the equity space, and plenty of others. So I would say, if you're sitting there and you're thinking there's just credit cards or overdrafts or C-bills, that's not the world we live in today. Everything is based on, what are you good at in e-commerce, what are you good at in retail, what are you good at in credit card terminal sales, etc. And there's products now available based on that. So yeah, it was a very good highlight, and yes, they're on our platform.
Fantastic. We are 1 minute over. I was going to ask you all for your final thoughts, but you're actually giving me a final thought without even asking for them. So genuinely, you've made my job very, very easy today. And so again, thank you all to the panelists and also the attendees for taking an hour. I see that we kept everybody, bar one that said sent their apologies for leaving, to the end. We will send a recording of this and also send links to each of the businesses as well. If you want to know more about Business Doctors, about NotJustNumbers, Swoop or Futrli, we will have details on there as well. And if there's any questions that come through, you can ping them through to myself, and we're more than happy to make sure that they're answered by the right people as well. Once again, thank you everybody for joining.
Thanks,
and,
everyone.
yeah, I'll leave you all now. Take care.
Thank you.
Bye.
Thank you.